Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all of these subjects, topics, looking for potential investment opportunities, sharing those investment opportunities with everyone on the website. So if that sounds interesting, we do have a special coupon code. Special is the coupon code. You type that in to get the discount. It's 50% off the first month only. And it's a larger discount on the yearly membership if you like to sign up. We also have a question and answer session occurring tomorrow, Saturday, 7 a.m. Mountain Time, where I answer whatever questions you guys send me. There has been some questions that were sent to me. I will be covering a little bit of oil and natural gas and presentations there, and we'll get into it tomorrow. Let's dive in, take a look. Starting with the DXY. The DXY is still hanging out here. It's up 0.17%. It's kind of a interesting dynamic here. We broke out of this rising wedge here. It's not a huge rising wedge. The projected move, it's generally the size. Kind of say that this is roughly the size there, just to kind of get it. You throw it there, and it's basically already hit its projected move there. So I would say that's been maybe met. We're also above support. This blue line here, there is support underneath that. So in this region where shares have traded through there, there's some support. We pulled on back, and we're kind of just hanging out here. You could say that this is an upward pattern where this could still break lower and try to attack the support level down here at about 106.50. We'll see if that occurs there. Rates are generally what drive it. So when I look at rates, the 2-year yield, this does look a little bit weak. We've broken out of the pattern basically to the downside there. And we haven't really mounted any buying pressure here. Makes me think that we could still head lower on the 2-year yield. But when I go and I look at the long end of the curve, the 10 and the 30, those don't look that weak. Yeah, we pulled back here, but we're squeezing up these past few trading sessions, the past 4. And we could try to mount a potential breakout here in a falling wedge formation where we could break to the upside. The 30 years doing the same exact thing. And you could say, here's your downtrend line. I'm using the closing prices, not the wicks of the candlesticks here. And that's your falling wedge there. And we could easily break out to the upside on both the 10 and the 30. Now, what does that mean for the DXY? Tough to say. I think the long end of the curve has an influence on dollar strength or weakness. So this is something that I'm just going to sit back and watch. I think the 10 and 30 look pretty good to go up, and then you could also state that we could be doing the same thing on the 2-year as well. If we look at it from this perspective of a falling wedge where we could break to the upside. So if yields break higher, I do think the DXY could move up. It could move up. TYX, TNX ratio, we're at that resistance level where we're trying to break out. We're coming from a really low level. And when this goes higher, this is generally good for precious metals, just generally speaking. TLT, which is bond prices, slightly lower. This is a tough read here. So generally, we've got on the, let's back up. So if you back out, it's a little bit easier when I look at things from this perspective. This is a shoulder, head, shoulder, totally a top here. And then we sold off. We broke the upper trend line here. We broke through that. Coming on down, we've got a rising wedge here that is broken to the downside. So the momentum is to the downside still. And this is most likely a bearish formation where we could break lower. We are in, quote, stuck in the mud because we've got a lot of trading that occurred mid-2000s all through here. So there's going to be good support resistance in either direction. It's stuck in the mud or quicksand or whatever you want to say. The 2 and the 10-year yield, we do see yield curve uninversion. So it pulled on back. That's with the 2-year going down 0.38 and the 10-year going up. We can kind of throw a little bit of a trend line there, and we're still above that. We can throw another one here. So we did enter this from the top side down, consolidate into a rising wedge type thing, and we could break lower. When this falls, we generally see a slowdown in the markets. Like here, that's a big move there. Here, and even here. Those are your slowdowns. Now, is something like that coming where the 2-year yield drops faster than the 10? That's not what I see, because you've got the 10-year yield that is above all this support in a falling wedge. So you've got conflicting data. The 2 and the 10, when I look at that, it's people running into bonds seeking safety. The 10-year yield does not look like people are running to bonds to seek for safety. And the 2-year, if we break to the upside of these falling wedges, I don't know how this dynamic necessarily plays out. We don't see in history very much yields going up and the 2 and 10 going down. One could state that the longer end of the curve is expecting inflation, and maybe this is a stagflationary environment. Perhaps the 2-year yield, uh, if it were to go down, I don't know if it'll go down, but maybe that is more in line with what the Federal Reserve is trying to manipulate. So maybe a stagflationary environment where we get a slowdown, but it's highly inflationary. The longer the curve goes up, and the short end stays lower. We've got gold slightly lower today. We had a monster day yesterday. We were down $14 today. This still looks really good. Kind of roll on these here. Break higher. We could do a retest. Definitely possible to break out and fill this gap there, but that's what we're seeing. Silver down 27 cents. We've broken out of this pattern. I'm in the camp that we could get a retest. A retest is where you break out and then you retest back on this trend line. But overall, it looks really good for a move higher on the longer time frame, and that's where I invest. I'm very much a long-term time frame guy. I think the short term is really hard to make good money doing. But we've broken out of that pattern there, and say you got a pattern there too that you broke, and I think we're going way high, way up. We could double from where we are today, and that would not surprise me. Some people think that we're going to get a retest here. I don't know about that. We've broken to the upside here. I'm looking for a move higher. Platinum up 1.5%. This is a really good move as we are starting to break through. We're turtle heading out of this downward trend line. This is also a gigantic bullish engulfing that engulfs all this crap before it. That is pretty dang bullish for a move higher. Now, I'm ultra long on platinum. I do have a somewhat biased view, maybe. I don't think I do, but I'm just, revealing what I am. But this looks really good. I think if we can break through, well, we're already doing it to some extent. So generally what you see in a downtrend or an uptrend, what you want to do is you want to create higher highs or lower lows, depending on which trend you want to develop. And here, I do a lot off of closing prices. So on a weekly closing price, which we just got, we're right at this area where you could be creating a higher low. No, a higher high, I should say. You're breaking out, creating a new high. Put it that way. So that is a good thing. Now, if we can keep moving and move on up, I think this will be a bottom and a breakout. Looks really good. Platinum is the cheapest precious metal there is on a ratio perspective given history. Palladium ripping higher, up 6% today alone. We're also seeing this move on up. I don't know if there's any sort of correlation with platinum and palladium and gold and silver and the problems that they're having obtaining gold in the LBMA. I don't know if this is just starting to run across all the metals, but we're up 6%, $61 an ounce in palladium. We've broken to the upside of this falling wedge and we are cooking. We're cooking. We've also got a downtrend break. If we take a bigger picture view here and we just kind of look at this stuff here, you can kind of draw a trend line through here, like this. That trend line is broken. We can also do logarithmic there if we want to do log. So there's log there. That downtrend line is broken. We came up, did a retest on support, and then generally you jump from that. So it makes sense. Palladium looks pretty dang good. GDX down about a little over 1%. We've got GDXJ down, which these are kind of bearish looking candlesticks because it's a bearish piercing engulfing candlestick that we got today, and SILJ down 2.5%, which is a bearish engulfing candlestick, which generally ends up lower. We do have a lot of support right at this general location of where we're at, so we'll see if that holds and what this looks like, or maybe it consolidates sideways. Kind of a surprising candlestick to see on a lot of these mining companies with gold and silver breaking to the upside. I know it's kind of weird. XAU to gold ratio is down 1.6%, signaling that is underperforming. XAU is underperforming gold. The gold and silver mining company is underperforming gold itself, and we're back at that support level. I'm on logarithmic there, but there's that support level going across there, right on top of support. We've got crude oil, which is just bouncing all over the place. Look at this, guys. We are like flinging all over the place here for crude oil. The thing that's weird is during the night or some of those times we're getting good movement upwards, and then when we come and open on the New York Stock Exchange, things just keep getting ripped to the downside. I don't know if something's going on, not too sure. To me, this looks like it's trying to bottom. So if we look at the shorter term picture view, you can take a downtrend line and just throw it on here. And if you go off the closing prices, you're right at about this location here. So I'm going off the peaks here. We've broken out here and then came back and did a big retest here. And it's been super volatile. Like someone's trying to push this thing down. And now we are breaking higher in after hours, I say, to the upside, about 1%. I'm in the camp where if platinum breaks to the upside, and platinum and crude oil are pretty highly correlated, I would expect this to break to the upside. What that means is when you see platinum start to outperform gold, there's the big candlesticks, there's the falling wedge that we're breaking out of. When you see this go up and platinum is starting to outperform a lot of different precious metals, this is when stocks generally underperform. And that I'm using the study that they had in Yale to show that. So look at crude oil is already up another 1.14. It went from 0.9 to 1. This is all over the place. But yeah, I'm watching it. Platinum and crude oil, if I were to put a platinum overlay on this, they basically move together. Crude oil is just is more leveraged on it. So, but they move very similarly in history. So if we are getting breakouts in fertilizers and crude oil, or fertilizers and platinum, I would expect crude oil to break higher. And I know there's people who disagree with me, but I go with the charts. I go with history. I like to think that I know history better than a lot of other people. I'm not just a chart reader. I do a lot of other stuff too. TTF up 4.19%. We are getting towards the upper end of that resistance channel. We'll see if it's resistance and if we can break out. So here's the thing. If you guys see a gigantic move here, big breakout like this, like some big move, you're breaking out of both of these resistance areas because that's where we're at. We're right at a crossroads of resistance. To me, this kind of looks like a double bottom. So we'll see if we can break. Natural gas in America is up 1%. I know there's some warm weather coming. I can see it in the forecast. Maybe that's why it's pulled back here. We did eat through a lot of our inventory, so that's good. So I think we're better set up for the summertime where we use a lot of electricity and in the winter for next winter. Our boy XOP, yeah, you know me, getting slapped around silly today. Look at this thing, down 2.4%. What is going on? What's with the momentum to the downside? Well, we're still above a lot of support here in terms of this guy here going across. We are underneath resistance, which is this big guy coming up here, depending on where you put it. I've got it kind of somewhere in the middle there. And then we've got this support line that I mean, you could draw this a different way. You could draw it like this as well, and that is still valid. A lot of support resistance through here. So we'll see if we hold. Um, I'm in the camp if crude oil breaks out, obviously XOP goes up, but a lot of people seem pretty confused here on the direction of everything. We're getting a lot of volatility. Look at the volatility in that circle there. Massive up candlesticks, massive down candlesticks. Usually what I see is I like to see the big green guys and the small reds. That's what I like, but we're still getting this strong selling pressure sticking around here, which gives me a little bit, a little bit of confusion of which direction the market really wants to go. OIH also getting a little bit of selling pressure today, down 0.86. The momentum is still down. That hasn't turned yet. And we need crude oil to break out, I think, before this does turn. We have come up here in this channel and we've broken to the downside there. Not a real good look, but we're cheap. And a lot of the energy service companies, I think, are going to be coming into favor. If oil continues higher or breaks out, I should say, I would say it broke out and it's doing a retest. That's what I would say. Breaks out and we have a clear direction. I think these things will turn around. Newcastle coal future up 1.46%. This is a bullish engulfing. This is a bullish piercing. In that circle looks pretty bullish. I'd be looking for a move higher in Newcastle coal futures. Looks real good. We also have support underneath us. That's good. We've got Sprout Fiscal Uranium Trust. We're still in this flag pattern. I'm sure people are getting real annoyed. What I'm going to say is don't get annoyed. Just let it be. Like, let it hang, guys. This is a bullish flag pattern to move higher. I can't control the markets, and neither can you. So what can you do? Just sit and do nothing. Look for potential entry points if you're a big uranium bull. I'm more in the oil camp and nat gas camp. Those companies make a lot of free cash flow. These guys do not, but we're still going to get a breakout, I think, and we're probably going to get a big run. Uranium futures price up a little bit, and we're coming right back in the tip here. We've got URA down slightly, 2%. We could come back and do another retest. Looks like a bearish engulfing there today. We've got URNM also selling off a little bit, and URNJ. Guys, this is a bearish engulfing here. So we came on down, came up into a bearish engulfing, which looks like it could head lower. What I would do or what I would expect is this type of move like that. So maybe we can get back down to that 16.99 level. Oh, please, guys, sell it off so I can get some more shares. Copper, right at resistance. We're getting resistance down 1.13%. We could pull back within the pattern again, which is what we're doing. But it could pull back a little bit more towards the bottom end of it. We've got copper, COPX down 2.2%, right at support. And that does look a little bearish. We've got iron ore up 0.33%. And I don't know if this is a legit move there, that candlestick, but it looks like it's ready to go higher and we could be breaking higher here any second. Looks good. Actually rip for iron ore. We've got aluminum down 0.77, still haven't broken through that horizontal resistance line. And we're still making a higher low, which is good. Nickel down slightly, trying to put in that double bottom. Haven't seen it yet. Move up yet. We've got Mu down 1.24%. We're up against resistance. It's trying. We've pulled on back today. Emerging markets are down slightly, right up on support, down 1.13. KRE also at support. A lot of these guys are kind of pausing here. Tan down. Tan looks ugly, man. This looks so ugly. Look at this chart. Came out, consolidated, and then Biden left us, and boom. It's down, down, down. Most of these companies cannot make money. And I'm sure they're competing with China, and China is ruthless. LIT, lithium, down right at support. It's trying to break out of resistance support here. There's that trend line, and we're right on top of it. We've got REMX right at support, down 1%. We'll see if it holds. Baltic Dry Index down another 1.5%. And haven't bottomed yet. You see a bottom here. Super cheap, super cheap. XHB down 2.28%, and that's with yields going up 0.6%. So it does look a little bit weak here for home builders. And could we get a bigger selling pressure move where this pulls on back? We very well could. It would be due to interest rates and mortgage rates, affordability. This is a bearish setup. This here is a bullish setup in the circle there in the short term. The longer, medium term, this one is the bearish setup. Russell 2000 down 0.86%, still within this flag pattern. The S&P down. This is a bearish engulfing. We'll see if we can get some, if it's going to get some follow through to the downside. These sharp reversals that engulfs the one before it. Bearish setup. We're also getting a bearish setup here. This is a bearish engulfing across these couple of candlesticks. It generally projects lower. We also have a couple here in front of this. They're all bearish engulfing, bearish piercing here. That's a lot of selling pressure. So we'll see if there's any follow through to the downside with them. We've got SMCI moving sideways, and it's going to move sideways for a while. Nvidia down 3.67%. This looks ugly as crap. I think we could go lower in it. Bitcoin down 3.2%. You know, here's the interesting thing. Is Bitcoin its standalone entity, or is it going to follow where the NASDAQ might go? I think the NASDAQ could potentially head lower. And I just think Bitcoin is just a leveraged way of playing it. So we'll see what happens. I'm curious to see, is this could potentially be a Batman pattern? Maybe, I don't know. We're above some support. I got to see this really blow up to the downside. I got to see big red candlesticks show up. We don't have that yet. And then Ethereum up 1.4. It's still in that squeezing pattern. It still looks bullish to go higher if it decides to do so. I mean, it looks good. We're squeezing up on support with resistance there. And then MicroStrategy down 1.5%. This is just going to go wherever Bitcoin does. Now, if the NASDAQ does drop and Bitcoin is just one big leveraged play of the NASDAQ, well, what if the NASDAQ drops substantially? Could Bitcoin basically break? I think it could. And that's where my hesitation is. Because it was created in 2008-9. That's when the NASDAQ basically bottomed and started to turn higher. So it was basically created here, and this is what it's lived through. One pullback and then just a big rip. I think that this is probably close to the peak. I would have purchased the NASDAQ here, knowing what I know all through here and just ride it. That's what I would have done. The commodity bull market in this picture started here in 99, 98, 99 here. We had this run up with it. The bull market started here. Here, let's just overlay this. You guys can see what I mean. So the bull market in commodities, the commodity to stock ratio bottomed in this general area there. It was 98, 99. So I'm going to grab a fractal. We call this a fractal. I'll just do a little bit of a fractal starting in 1995. That is a fractal of the top. running into the 2000 top, and this is the big pullback. What I'm going to do is I'm going to zoom back out, and I'm going to go up here. I'm going to squeeze this up. I'm going to start it in about here. Then and then I'm going to rise it. So maybe if this were to run, I mean, maybe we get something like this. And if we had something like this. So see that fractal and kind of how it overlays? Well, anyway, um, if depending on what we do here in terms of interest rates, if the interest rates drop, that is a possibility where this continues to run higher. If they don't drop and they continue to go up, it's going to be a major headwind, and I think we're going to see a pullback in these. But that's what I've got there. We've got the VIX too, coming up a little bit as the sells off, and we'll see if this starts to work its way on up. A lot of this stuff is currency flows and interest rates. The money flows move with interest rates and dollar. Um, it also moves with the business cycle. So the business cycle's been positive for the Nasdaq and the S&P 500 since 2008, 2009. Hasn't turned completely yet. We generally get a bullish run with commodities and stocks in the beginning of an expansion phase, which we're doing. I'm surprised at how resilient Nvidia, or not Nvidia, but the Nasdaq and the S&P have been. So generally they run together and then they're going to peel off. We're going to see so interest rates will go up with the commodity bull market. It'll hit a certain level, probably around 5%, roughly where we're at. I think the S&P 500 and the Nasdaq will start to get a little toppy because they're more growth projected. Where interest rates go up, net present value calculations go down, and then they start to transfer money, rotate money out of the Nasdaq and the S&P 500 into commodities and precious metals. So what you'll see is you'll start to see all this run. You'll see money creation, gold goes up, which we're seeing, and then they're going to probably try to lower interest rates to hold all this up. And that's at 5% level. So if interest rates continue higher, I think we're going to see headwinds for some of these S&P 500, NASDAQ, and then you'll see a separation between those, and commodities will really start to move to the upside. And that's where you'll get 5 to 10 years of outperformance in commodities is the expansion phase. But that's all I've got, guys. If you guys want to hit up the question and answer session tomorrow, 7 a.m. Mountain Time, hit it up. And that's all I've got for today. So give me a thumb up, subscribe to the channel, subscribe to the website, special coupon code, put in coupon code special. Special is the coupon code. If you'd like to join, and we'll catch you later. See ya.